Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar and our 548th video. Traders, these videos are being done for you so we can teach you techniques that work really well when trading markets, stocks or commodities. Mostly commodities, but works well in stocks. This video is being filmed on February 14th, 2010. That's a Sunday and St. Valentine's Day. So happy Valentine's Day to the people out there that actually believe in that stuff. All right, traders. What I wanted to talk to you about is quite simple. It's something that we went over in the last video. And being that this is a learning process, I thought I would show you more in this video. And then we'll see what happens going forward. And what that is this. 3-day weekend holiday reversals are abound. Traders, that's what I said to you in the last video. I said watch out for markets that were going down. They go up for no reason. Markets that were going up come down for no reason. Leading into the 3-day holiday weekend. And suddenly once you get back to Monday, Tuesday's trading, everything straightens out and the markets go right back into their natural trend. That's what I profess happens leading into a 3-day holiday weekend like the one we just had, like the one we're having now. President's Day here in the United States. Markets are closed Monday. All of last week we started having reversals in many markets that should straighten themselves out and go back to their normal patterns this week. Traders, being that this is a holiday, I'm not going to spend too much time here with you, so I want to get right into some charts. With no further ado, let me show you what I mean when I talk about 3-day weekend holiday reversals. And on my board, you'll see a bear flag. There's a lot of significance with this drawing right here, so keep an eye on it. Look for the bear flag in the chart segment. With no further ado, let's go to the charts. Okay, traders, what you will find in this chart segment is that I just went and took a sample from a couple of different sectors. There's a sample from the gold or the metals sector. There's a sample from the indices. There's a sample from currencies. I just went and grabbed one chart from a couple of different sectors so that I can show you that the 3-day weekend holiday reversal is not just a phenomenon. It is a truth. It is something that you can count on. It's something that can be traded. What do I mean by that? First off, we break the OMNI average and have a big down day, right? However, this pattern has been working its way down. You'd have to call the natural trend lately lower, right? Since November, December, we've been going lower in the gold market. This is April Gold's daily bar. Then I state, especially after we have a big down day last Friday, leading into Monday last week, heading towards the 3-day holiday weekend. What happens on Monday after Thursday, Friday, SmackDown? The first update we have is Monday, Tuesday, Wednesday, Thursday, Friday. Look at how the market heads back up and puts in a bear flag right during the week of the holiday reversal. We're going down, down, down on Monday, represented by this arrow here. On Monday, we start to go up, 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 up. Are you kidding me? That is a reversal, traders. The natural trend here lately is down. And we went up for all of last week, right until Friday. And on Friday, we backed off a little, just as we expected would happen. That is a reversal taking place before your eyes. Natural trend lower. Suddenly you go up for almost 5 days leading into a 3-day holiday weekend. That is the 3-day holiday weekend reversal. So you've seen it here in gold, right? We took a sample out of the metals. Let's go look at a couple of other samples from a couple of other sectors. Okay, traders, we are now looking at the dollar index, and its natural trend lately undoubtedly has been up, right? Clear to see, very simple to see that we've been in an upwards pattern. What happens on Monday of the reversal week? We start a down pattern. 1, 2, 3. So Monday, Tuesday, Wednesday, Thursday, all down days. Finally, Friday gets back on its horse and starts going back into its natural trend. What gets created right here? A strange looking but still true bear flag. Excuse me, bull flag. That's a bull flag because it was going up, starts working its way down, will usually head back up. Point of this is 3-day holiday weekend reversals. We're going up, 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 and suddenly we head down for 4 days leading into a 3-day holiday weekend. Traders, that is the reversal taking place right before your eyes. Please remember this for the next big 3-day holiday weekend. The reversals really do happen. They really do work. Will it happen every single 3-day holiday weekend? Of course not. Nothing is that accountable in technical analysis. However, you can see it happening more often than not. So you've seen it in the metal sector. We took a look at it in a currency. Let's go over to grain, something completely different, and see if it happened there, the 3-day weekend holiday reversal. Okay, traders, with the 3-day holiday weekend reversal in mind, March wheat daily bar chart natural trend lately has been down, as you can clearly see. But what happens right here on Monday last week, the week I expect a 3-day holiday reversal? Up, 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 up. 4 days in a row. Finally Friday, as it's getting back to normal, it breaks back down. What does it create? A bear flag. Here's your flag pole. Here's your flag. And we got down out of that flag as of Friday afternoon. Again, traders, the point being, when you have a 3-day holiday weekend coming up, expect reversals that week. This is happening chart after chart. We're not playing games here, traders. This is happening before your eyes. There's your holiday reversal and the bear flag. Now, speaking of flags, remember I said keep the flag in mind, right? Wait till you see these next 2 charts. Okay, traders, Emini S&P daily bar chart, holiday reversals expected, right? Well, as you can see, since December or the end of December, the natural trend has started to drift lower, right? Clearly you can see that this is a trend now moving lower since here. Lower we're starting to go. That would mean that you'd expect the market to move higher on the week leading into a 3-day holiday, 3-day weekend holiday, right? Well, here you have the S&P daily bar heading down, heading down. What happens on Monday? It starts to go up. Tuesday, Wednesday, Thursday, Friday. The week leading into the 3-day holiday weekend, which starts here, even though we're not going to be open, the market went up and created what? Mikey, what did we create here? Can you tell me?
Bear flag.
A bear flag. Very good. Market reversal happens leading into a 3-day holiday weekend and creates a bear flag. But there's more. See the bear flag right here? Well, look, we just got below the OMNI proprietary moving average right here as we created the bear flag. The flagpole was created when we crossed the OMNI proprietary, or the OTAPMA. You've heard about this enough times. Well, when you break the OTAPMA and start to break down and put in a bear flag, the next thing that happens is lower, lower, lower. And if you'd like to see proof on that, traders, take a look at this next chart. Remember, this is the S&P. Just broke down through the OMNI proprietary, put in a bear flag. What should come next? Let's show you what should come next. Okay, traders, Euro currency daily bar chart. Here you break the OMNI proprietary. As you're putting in a flagpole, it creates a bear flag. Do flags work? I say yes, because look what happened after we came out of that bear flag. All the way down here, traders. Monster drop. Here's what's important. Right here, we break the OMNI proprietary and put in a bear flag. What comes after the bear flag? A bigger breakdown. Where are we in the S&P? We're in this stage right here, traders. We got through the OMNI proprietary and are creating a bear flag. This should be the next wave in the S&P, just as it happened here in the euro currency. Please pull your charts, pull your own charts, of course. Do your own homework, look for your flags, go back and see what happened after euro currency put in a flag. Compare the euro currency chart to today's S&P chart. What you will find is that they look very similar. This looks like the fate of the S&P that we are trading as of today. Okay, traders, again, pull your charts, take a look at this. I'll compare notes with you at the site. So, traders, you've seen those charts. You see what I'm talking about here, right? This is important. The bear flag. You seen the bear flag in the euro currency? After getting under the OMNI proprietary, you seen what happened to the market. Now in the S&P, we just got under the OMNI proprietary. We're just creating a bear flag. The downside should come our way. Am I an advocate of the downside? Well, to be honest, I'd like to be cheering for the upside right now. Let's go upside, but I can't because the analysis will not let me. The analysis says, got another down leg coming, Oscar, and you're going to have to tell this to the people who are fans of yours on YouTube. So here I am telling you. Looks to me like we got another down leg coming when we complete the bear flag if it has not been completed already. The other really important lesson in this video is that 3-day holiday weekend reversals really do work. They work in many different sectors. I showed you in the gold sector. I showed you in the grain sector. I showed you that in the indices or currency sectors. Both of them actually. It works well. The reversals do come. They don't come every holiday, but they come more often than not. How should you handle them? Well, traders, you could try to be a hero and want to buy for the flag, but instead, why not wait for the holiday to end and go with the natural trend back down again? Because that's where the market likely wants to go. So instead of you trying to get long, trying to catch the reversal, let the reversal happen. Wait for Monday, Tuesday after the holiday and get back into your market. If it's a bull market, you'll get a bearish move leading into the holiday weekend. Then you get bullish when you come back from the holiday. If it's a bullish market, you should get bearish market movement during the holiday week and then straight back up when you come back from the holiday. It works both sides, bullish or bearish markets. Doesn't always work, as I've said, but it is a great technique and a great tool for you to put in your arsenal of tools that we arm you with to help you in your fight or war against these markets. Because boy, oh boy, is there a war out there every day, traders. You need to do your homework, do lots of analysis, read the newspapers, and pay close attention every day to get this right. It is not an easy game. Traders, a stop is your best friend. Never ever trade these markets without stops. Remember not to fall in love with the upside, because when it rallies, I'm selling into those rallies. We are an official seller of rallies in the U.S. indices until further notice, as you are aware. All right, traders, that's about it. I want to go enjoy the holiday and go enjoy my children, so I'll speak to you at the site. Please come on down to www.livewithoscar.com. Jump into the free chat room and allow us to help you become better analysts, better traders. And why bother to trade alone? Don't trade alone. Come trade with us, traders. There is an army of Omniacs that gather and huddle every day in our chat rooms, and we help each other get through these rough and tumble markets, so come on down. All right, traders, that's it. I'm leaving. Give me contact there at 702-629-4755, and always keep your emotions out of trading. One of the best things you can do is say this to yourselves every morning, every afternoon, every evening, because it'll help you with that problem. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.